This is the best of Bloomberg Technology, where we bring you all of our top interviews from this week in tech. Coming up, tech earnings launch. Netflix delivers the Wall Street surprise. We have details, plus a preview of all the rest on deck. Plus, another week of head-scratching over WeWork. Investors wonder whether it will be JP Morgan or SoftBank to rescue the co-working space company. We'll have the latest. And cryptocurrency crusader, Facebook's David Marcus, sits down with us to talk about the embattled Libra digital currency project, as well as regulatory hurdles. Tech earnings started in earnest this week, with Netflix being one of the most highly anticipated. The streaming giant impressed Wall Street amid stiffer competition. International growth contributed to a positive report, despite new U.S. subscribers falling short of estimates. Revenue climbed 31% to $5.2 billion. I dug into the details with Bloomberg's Lucas Shaw.
I think the story is that investors were clearly worried that Netflix was going to have another bad quarter. They disappointed in the second. They only added a few million customers, fewer than people had expected, and investors expected another bad one. One analyst I spoke to ahead of this week said that sentiment was awful, and instead they come in right around expectations. Yes, they were a little bit beneath. They missed in the U.S., but they were above internationally, and that is where Netflix has been telling people for years their future is. It's a sign of where Netflix is going, that while they're going to have one of their worst years ever in the U.S. this year, they're going to have their best year ever internationally, and that's because they have shows that are clearly resonating in Europe, in Latin America, and Asia. And again, in a sign of confidence, Netflix in the upcoming quarter is going to start breaking out its subscribers by region, which suggests that they now feel confident enough in the numbers in some of those areas to talk about it, which they have not previously.
And Lucas, talk to me about the domestic numbers. They're reversing a decline. Is it enough?
I don't know. I don't know how concerned people are. Netflix has cleared the $60 million subscriber threshold, which is what CEO Reed Hastings had long said was kind of the bottom. He projected 60 million to 90 million in the US. This was a while ago, but let's keep using it. They have cleared 60, but they are going to only add about 2.7 million this year. They had historically been adding about 5 million a year. They say it just because of a price hike, and maybe that means that next year they're up to 3 or 4 million, but they also are going to be facing a lot more competition from Disney, from Apple, from AT&T, from Comcast. I think we're probably setting into something of a new reality for Netflix in the US, where after years of growing at 5 million a year, maybe it adds at 3 or 4. If they can keep that going, they'll be okay, because they'll still get to 70 or 80 million in the US, which is a pretty good number, again, provided they are also growing overseas. And the thing to keep in mind is that they are now generating more money from each one of these customers. So their revenue per customer is up, and the margins on those customers are up, because the price increases have worked without costing them too much.
That was Bloomberg's Lucas Shaw. Analysts had no shortage of reactions to Netflix. Macquarie said, quote, "In some ways, Netflix defied the naysayers." eMarketer research analyst Eric Hagstrom joined me with his own analysis after the report.
The biggest takeaway is that ultimately subscriber growth is slowing in the U.S. They missed very slightly on their previous guidance, and this is after a negative Q2. What this means going into Q4 and as well as 2020 is that they're not growing as much as they have in the past. That's partially because half of all households in the United States subscribe to Netflix at the moment. And this is really concerning for them moving into this new reality of competition with Disney, competition with AT&T, with Apple. Previously, companies like Disney and AT&T provided a lot of content for Netflix, and they were partners in a lot of ways. Now they're turning into competitors, and this is becoming very difficult this is a difficult problem for Netflix to solve moving forward.
Okay, so you bring up the competition. Let's go there. All we heard from the company was that next quarter will bring some modest headwinds to the company given the competition. How much can they withstand the fact that in the fourth quarter you're getting companies like Apple TV Plus, you name it, Disney coming out. I mean, how strong really is that competition?
Well, there's a lot of excitement around Disney in particular. But the thing to realize as well is that a lot of these other services, Disney, Apple, as well as old competitors like Amazon that still are very, very strong, they don't necessarily have to turn a profit on streaming video on itself. Apple's really using their service to sell more iPhones. Amazon's using their service to sell, more of everything, and Disney's using their service to draw people into their entertainment ecosystem. What this means for Netflix is that they, have to be more careful on price moving forward. When, for example, Apple's giving out their Apple TV Plus service for free with a new device purchase, what this means is that Netflix is going to have to be very more careful moving forward, raising prices, especially if they want to keep their current subscribers.
Although the price hikes are trying to help offset the negative free cash flow. This is the story that we know about the company. If you come and take a look at a chart here that I'm showing in my terminal, it is the classic negative free cash flow that we see from the company. The current quarter has yet to be pulled into that, but again, it's a negative number. That's pretty much all we need to know. What are you hearing from the company about potentially a flatlining to eventually a positive free cash flow scenario?
Well, they raised prices to ultimately improve their profitability as well as their cash flow. But again, the subscriber is the base of their business. When they want to, when we start talking about profitability, cash flow, it all starts at the subscriber. And if they start losing subscribers in their largest market in the US, that's going to be very difficult for them moving forward. I don't think that they will lose, but it's going to be difficult for them to grow.
That was Eric Hagstrom of eMarketer. IBM also reported earnings Wednesday. The company reported revenue that missed the lowest analyst estimate, falling nearly 4% in a fifth period of decline. Total revenue was $18 billion. In July, IBM completed the purchase of the open source software company Red Hat for $34 billion. Analysts had looked for signs that the mega deal would drive growth. And as for what next week holds, we'll get results from big tech companies like Amazon, Microsoft, Intel, and Twitter. With more on what to expect, I talked to Mark Mahaney of RBC Thursday.
We're going to add about 2.5 million subscribers this year. Netflix, that's in the U.S., I'm sorry, just in the U.S. The last 5 years, Netflix has added about 5 million subs a year. So when the growth slows down, it tells you that you're pretty far along the S-curve in terms of penetration. Now, you have to caveat with one thing. Netflix did impose a price increase earlier this year, and this was the biggest price increase they've ever implemented because it took their low-end price, $7.99 to $8.99. I think that's the issue for Netflix. I think they overstated or overthought or overestimated how much pricing power they have. It's going to take them a couple of quarters to work through that. I still think they're deep along in the S-curve in the U.S. Plenty of growth opportunities, however, in the overseas.
But they did talk about how some of that price increase was pressuring them a little bit in terms of new subscribers. Does it make sense for them to adopt a lower price ad-supported model, for example?
Possibly. One, I don't think they're going to do it, having asked them this question about a dozen times over the last dozen years. I don't think they have any interest in doing it. Maybe they'll change their mind in the future. Possibly that they could introduce a lower price subscription plan, but I don't think they'll do that. They have a lot of confidence, and maybe it's arrogance, that the content, the quality and the amount of quantity and the quality of the content that they have is enough to justify the $7.99. And frankly, I think it probably is. It's $1 more. Their base price is $1 more than Disney, but you get a lot more content than what Disney offers. So I think it's actually justified. Would it help them to go to a lower price point? Probably, but I don't think they're going to do it.
Would it make sense to buy a Hollywood studio? They're one of the few competitors that aren't in a big blockbuster movie theater. They've said that their content won't be out there. Would they just buy a Hollywood studio and then be able to get that distribution that way?
Possibly. I don't think so. I thought you were going to go the other way, Taylor. I thought you were going to talk about whether they would get more into the production side rather than the distribution side. I could see them vertically integrating into production, not so much into distribution. I think they're pretty happy with home distribution. Yeah, I think that's kind of where the growth is. Look, this revolution that we're living in isn't going to be televised. It's going to be streamed. Everybody is going to streaming. Disney, Apple, Time Warner, Comcast. I think Netflix is in the right business. The question is, do they keep executing well to develop a good good enough content to justify these price points they offer.
So you've brought up all of the competitors.
Yes.
Of those competitors, who is best positioned to take on a company like Netflix?
Only Disney. I don't think Apple is really, unless they really want to put a lot of money into content, which I don't know that they do. And then they also have to come up with a more compelling service. You can't just throw money against this problem and assume you get it right. Netflix has been doing this for a long time. Netflix has 5 times as many subscribers as anybody else. It does give them a scale advantage. And I want to get one thing really clear. The battle here is in international markets. Next year, Netflix is going to roll out 130 new local language series in international markets. I'm talking about the Philippines, Turkey, Nigeria, everywhere around the world. That's where the sub growth is, and I think Netflix is way ahead of the curve on this. That's their big advantage right now. A lot of problems near term, but that's their big advantage long term.
So you also cover Roku. Is
Yes.
international growth the key to Roku's expansion?
There's 2 things that are key to Roku. One is that it's a great play off of these streaming wars. All of these new streaming services, in order to get subs, they're going to have to advertise somewhere. They're going to advertise on Roku because Roku already has 30 million streaming subs. Secondly, if you start your subscription on Roku, you're going to have to share some of that with Roku going forwards. And then third, anything that leads to diversification of content is beneficial for kind of a Switzerland, which is what Roku is. International is part of the growth strategy, but they barely scratched it. So yes, if they knock the cover off the ball as well in international markets as they've done in the U.S., the stock could triple from here.
I want to switch gears a little bit and talk about Facebook. There's been a lot of rumors this week and talks about Libra, if the cryptocurrency works, if it doesn't. Is Facebook doing the right strategy by going out on these new ventures, or do you think they should just stick to their core business?
I don't know, Taylor. You're asking a good question. Libra, look, they have these wonderful assets. One's Facebook Messenger and one's WhatsApp. These are the 2 most popular messaging applications in the world. And right now they generate about 0 in revenue for the company. So could they monetize it through advertising? They're pretty good at doing that. So they should probably try that first. Could they create a wallet around it? Yes. Does it have to be a crypto financed wallet? I don't know. That was always the question in my mind. Why do we have to go Libra? But I think it's too early to call whether that was the right move or not. That they think about monetizing it through a wallet, I think is a very good idea.
As you assess the earnings landscape, what's your top pick this season?
Well, I think right now it's Facebook going into earnings. And Facebook's the most interesting because I know we just discussed about the Libra issue. The rest of the business, I think, is humming. This company is going to do north of 30% revenue growth this year. I know there's a lot of overhangs on it. I know you're going to ask about regulation. But this stock trades at a discount to its growth rate. You rarely see companies sustainably trade at a discount to the growth rate. In other words, it's 18 times GAAP earnings for like a 25% earnings grower. There'll be an arbitrage there, and the multiple is likely to go up. When it does is hard to know. Sometime in the next 12 to 18 months, I think there's a material re-rating in the stock.
That was RBC's Mark Mahaney. Coming up, Facebook CEO Mark Zuckerberg defends free speech on the internet at Georgetown University on Thursday. We'll have more on his appearance, plus reaction. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Facebook CEO Mark Zuckerberg made an appearance at Georgetown University Thursday. There, he defended free speech on the internet and staked out the social network's position on the matter.
We don't do this to help politicians, but because we think people should be able to see for themselves what politicians are saying. And for the same reason, if content is newsworthy, we also won't take it down even if it would otherwise conflict with some of our standards. Now, I know many people disagree with this, but in general, I don't think it's right for a private company to censor politicians or the news in a democracy.
For more on the appearance and message, I talked to Bloomberg Technology's Kurt Wagner.
You have a CEO who's currently dealing with like 4 antitrust organizations talking about decentralized power and how his platform is actually good for people. He talked about the power of being able to reach the masses, kind of this power of scale as being the 5th estate, actually, is what he was talking about today. And so, overall, there were a lot of talking points from Facebook that we had heard before, but I think some of the keys were, we are actually doing a good thing here by giving people a voice. We are, supporting politicians by not pulling down their ads and being worried about the accuracy of political ads. And then he also kind of brought up this threat of China, which is something he's done before, and really just said, if we don't do this, China might come in and take over, and they don't have the same beliefs that we do, and that's a real threat.
Before we get to China, I want to hit on the first point that you made about sort of Facebook not wanting to be in the fact-checking business. What is their defense for not wanting to do that?
Yeah, so you kind of heard him talk about it there. He says that no one really wants to have a tech company be deciding what should be true and what should be false and what should be allowed on the internet and what shouldn't. And this has been a debate around Facebook for a really long time. What is the company's role in dictating, what exists online? And so part of his argument there was that if we are the ones who are fact-checking political ads, or if we get rid of political ads altogether, which is actually something I wrote about this week, I think Facebook should consider doing. He says that that is actually going to benefit the incumbents, because suddenly the people who already have a platform, who already have attention from the media, those are the only people who are going to get talked about, not the people who are willing to pay to kind of make their way onto the scene. So those are a couple of his arguments for why he thinks not only should political ads should stay on Facebook, but why he thinks they shouldn't be meddling with them.
That was Bloomberg Technology's Kurt Wagner. Now, someone who's been following free speech on the internet is New Yorker staff writer Andrew Morantz. He is the author of the book called Antisocial: Online Extremists, Techno-Utopians, and the Hijacking of the American Conversation. I got reaction to Zuckerberg's Georgetown appearance Thursday.
I think this is a perfect encapsulation of how misleading a lot of these talking points are when it comes from the people who built these systems, because, he wants to make it seem like this is just a neutral public square and that he is just someone who wants to let freedom of expression reign and not be a gatekeeper. That's fine, but he is a gatekeeper. Facebook makes decisions about how their algorithms work every day. They make decisions about what you see in your feed and what you don't. So it's just disingenuous to suggest that this thing that he built is not already putting a finger on the scale. It reminds me of someone who built a big highway system and then says, well, we like freedom of enterprise, we like cars, we don't want to deal with the fact that pollution is killing our environment. Well, sorry, you built a system, it's having consequences, you have to clean it up.
And if that is the case to be made of why there have been increasing calls for Facebook to be treated like a publisher or even a utility company with more regulation.
Yeah, something has to be done. Look, it reminds me of starting a big warehouse party. This is an example I use in the book, an analogy. You start a big party, you hope everybody's going to have fun and just get along. But if you don't build in a sprinkler system and people start setting things on fire, you don't have any way of policing things or controlling things when things get out of control. You can't just hope and pray that progress will keep going and there will be some arc of history that will deliver us to a better result. Facebook has been used to spark genocide in various countries. It has been used to spread autocracy throughout the world. So it's nice to rest on the abstractions of free speech, but abstractions are not going to get us very far. It's too late for that.
We heard from Mark Benioff as well this week, making calls for Facebook to be broken up. But does that actually solve the problem?
No, it doesn't solve the problem. I think the problem is deeper than that. The reason I wrote a book called Antisocial is not because it's just anti-social media. It's because there's this feeling that all of the internet would be pro-social, in the sense that it would bring us together, it would make the world a better place. That was the first 10 years that was all about what would be pro-social about social media. There was always an antisocial side. There were always people inciting violence. There was always harassment. There was always bigotry. We just didn't want to think about that. We didn't want to look at it. We wanted to think about the Arab Spring and democracy and all the fun stuff about the internet. But if we don't look at the harm that can be caused, we're just kidding ourselves. We're just leaving out half of the story.
So you brought up the book. You were on the road conducting dozens of interviews. What was the biggest thing that you learned?
In addition to interviews, I was just a fly on the wall as these people, trolls, propagandists, misogynists, bigots, as their kind of mask would slip. So I was in the room, with a guy in Orange County, California, who was just a average married guy in his 40s, not some teenage troll in his mother's basement. A married guy with kids and a dog. He would wake up in the morning and he would say, I want to create a subliminal association between a political candidate I don't like and disease and disgust. And even though he didn't have evidence to do that, he would just do it. I would watch him just open Periscope, rally a bunch of his followers, get a Periscope hashtag, get that hashtag trending on Twitter, and then from there it would just enter the national discourse to the point that I would wake up the next morning and read the newspaper, and this guy's fingerprints would be all over the news. And trust me, this is not a guy that we want with our fingerprints all over the national news.
So you fold this into what you've observed into action. Not only did you write a book, but you had an op-ed recently which said one thing they could do is replace Sheryl Sandberg with a human rights lawyer, someone who can teach us how speech can lead to violence. Why Sheryl Sandberg?
I think that from all we've heard, she seems to be the person who is most promoting profit at all costs in that company. Most of the reporting that's come out of there has said that she was the one who set up the advertising model. She's the one who's been really uncompromising about kind of full steam ahead with anything that gets in the way of profit, you know, sort of being eliminated. And some things that get in the way of profit are just necessary for our survival, like making sure that these platforms don't spark genocides, making sure they don't spark violence, making sure people don't get killed because of these platforms.
That was New Yorker staff writer Andrew Morantz. And coming up, WeWork gets a lifeline. SoftBank said to be readying a $5 billion rescue plan for the co-working space. We'll have details. And later, our conversation with the man leading Facebook's foray into cryptocurrencies. We speak with David Marcus. This is Bloomberg. WeWork's future remained a bit foggy, but Bloomberg did report that SoftBank is said to plan a $5 billion rescue financing for the co-working company. WeWork was also believed to be considering a JP Morgan rescue plan. I got more details on the SoftBank scoop from Bloomberg Technology's Ellen Hewitt Wednesday.
This is one of two plans that are maybe in the works that are the subject of a lot of discussions going on this week with the WeWork board. So they are scrambling to figure out how can they keep this company going when, as we've reported in the past, WeWork is set to run out of money as soon as next month. So as you mentioned, there's this new deal that we have some details on, a potential proposal from SoftBank to invest something around $5 billion in the company that would give them a much larger stake in the company, although, as we've reported, not a majority stake.
Now, do we know if this is in lieu of the JP Morgan deal or instead of?
It seems like these are both on the table. They're pretty different. So one of the major decisions that the board is going to have to deal with this week and into next, depending how long it takes them to make this decision, is which one is better for the company, which one is going to provide them a better path forward. So the JPM deal, as you mentioned, is around the same amount of money, $5 billion, but in a somewhat complicated debt package. So they're trying to pick.
And with this SoftBank deal, do they get control of the company?
They do not, as far as we understand it, get majority control of the company. You know, you have to remember Adam Neumann, even though he's no longer CEO, he's still a board member. He still owns a lot of stock. Obviously, in a transaction like this, some of that ownership could change, but he still has super voting shares. SoftBank could be looking to get non-voting shares or some combination of different shares. So they'll be taking on more of a stake in the company. Their control not necessarily guaranteed.
So then what would be the new valuation?
That is a remaining question. It's definitely going to be lower than this $47 billion kind of high water line that came up earlier this year. It seems like the ranges are all over the place, but it could be, maybe as low as under 20, maybe under 10, who knows?
We talked a few days ago about sort of the reputational to SoftBank by putting up this money, what that says about, sort of the whole deal that all fell through. What is the downside for SoftBank in this?
I think it could, if it ends up going poorly, could really be seen as good money chasing bad, right? Like, they have already invested, as we've talked about, more than $10 billion in this company. They're obviously attached to the outcome of what comes out of WeWork, although this plan makes it, then it's almost like WeWork becomes a SoftBank company. It would be something where they would probably have a great say in installing maybe potentially a new CEO to replace these co-CEOs who came from WeWork. It could end up being something where they feel very responsible, and the narrative suggests that SoftBank then kind of becomes responsible for whether WeWork ever really makes it out.
That was Bloomberg Technology's Ellen Hewitt. Coming up, Libra pitchman. We'll hear from Facebook's head of Calibra, David Marcus, next. And And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Taylor Riggs. Despite losing at least 7 partners for its Libra cryptocurrency project, Facebook got the remaining 21 to sign on the dotted line Monday. Bloomberg's Kurt Wagner had this interview with David Marcus, Facebook's head of Calibra, Tuesday.
Yesterday we had our inaugural council meeting in Geneva, and it was a really awesome moment where 21 companies came together, not only companies, actually social impact partners, venture firms and others, came together and started working on not only establishing a governance model for the association, but also distributed different roles. A board was elected. I was lucky enough to also be elected at the board with 4 other amazing individuals that I'm really looking forward to working with. And the big change is that fundamentally yesterday, this project moved from being Facebook-led to being led by this association, of which we're one of 21 members now, and in the future one of 100, and one of 5 board members. So really looking forward to the next stages here, and it was just great to feel the passion and the energy in the room and the commitment from all of these parties that are now really going to work on really trying to change the status quo for people all around the world when it comes to access and cost of financial services.
Now, I know when you initially thought of this first meeting, there were some other companies that you thought might be there: Visa, MasterCard, Stripe. A lot of these companies announced late last week that they were leaving the association. Tell me what was happening behind the scenes as a lot of these announcements kind of came out around the same time on Friday.
Well, look, first I have to say, and I said this publicly, I want to thank all of these companies for coming along on the journey. When you're in the payment space, wanting to really explore something that could potentially be disruptive, and wanting to lean in like this is really remarkable, and is to be commended. I think, towards the end of last week, there was a lot of pressure mounting, and I totally respect the fact that, those businesses and those leaders have a responsibility to their shareholders, to their employees and stakeholders, and given that you don't need to be a member of the association to build on top of the Libra network, all of these companies will still have the ability to build on top of Libra. I understand that they don't want to do the heavy lifting by our side at this moment in time, and that's okay. We're going to move forward. We're going to add more members going forward in the next 2 quarters, and we're going to work really hard together to address all of the legitimate concerns that were raised by regulators and stakeholders around the world before this can move forward.
A lot of the companies that did leave, at least late last week, they're payments companies, they're financial services companies. Yes. Theoretically, those are companies that are familiar with the road ahead for you guys. Are you worried that they maybe know something that you're unaware of here?
No, and I want to strongly state that. I don't believe we're unaware of anything. I just believe that when your core business is in this space and you probably receive a lot of pressure not to press on, then at some point you have to make a decision on this high-risk project, because it's a project, it's an idea right now that we believe will see the light of day, but there's just a lot of hurdles that we still need to clear, and your core business. And again, you have to put your core business and your own business interests first versus a project like this that is high beta. And so I understand that given that they're in the space, that they would, receive a lot of pressure and want to prioritize their own business.
I want to talk about some of that pressure. There was a letter that a few Democratic senators sent to a lot of these companies, basically urging them not to join the association. It read in many ways kind of like a threat. I'm curious, did you take it that way when you read that letter?
Well, I don't know. What did it sound like to you, Kurt?
It did sound a little bit threatening. It was if you don't, if you join, you're going to have a tougher road ahead. I'm curious, have you been surprised, I guess, by the pushback that you've received from regulators?
No, and again, I'd say that there are two tracks here. I'd say that there's the engagement on the regulatory front where we've had very constructive conversations. There are questions. Those are legitimate questions. We need to bring the right answers to those questions. Now we have the ability to do so. Since yesterday, we finally have a governance model and an association that is fully formed. It was really hard for us to speak on behalf of all of these prospective members before they became members. Now the association can take this on and really make progress on all of these questions. But I'd say that for these types of letters to be circulated for a thing that's an idea, a project, and telling people you should not explore innovation and a project at a time where not only here in this country but all around the world, the core of our financial system hasn't evolved much in the last 50 years, and consumers all around the world are paying the price for it. I think we should ask ourselves whether this is the right approach if we want to really lower cost and lower the barriers of access for financial services for all of the people who deserve so much better in the world.
When you guys announced the formal association yesterday, you said that there were as many as 1,500 other organizations or companies that are interested in joining. Can you give us a sense of how soon you may be expanding the association and who might be joining you guys?
So these are the types of things that I can't, talk about anymore from Calibra, because this is now in the hands of the Libra Association. What I understand from the process that the Libra Association is now running is that they will work towards welcoming more members in the next 2 quarters, and my guess is they'll share more about new members as they join.
That was Bloomberg's Kurt Wagner with David Marcus, Facebook head of Calibra. And the digital currency revolution in play this week as the G7 released broad guidelines for regulating digital money. Also up for discussion if central banks should be issuing their own. Already, Sweden and China are studying that topic, and the Bank of Canada has launched a formal research project that has partnered with other monetary authorities. I got insight on Wednesday from the president of Peterson Institute for International Economics, Adam Posen.
First, they've got to regulate and keep away regulatory arbitrage that basically would exploit average people or small businesses if you have private currencies that are not regulated. Second, central banks should be involved because they can provide efficiencies and safety that make private currencies irrelevant. But third, they should not be getting involved just because it's digital, just to save people money. They should not be getting involved to try to be able to drive down negative rates. As Governor Lael Brainerd said at a speech earlier today at Peterson, those are not really motivations you want to have, and I agree with her.
Well, I want to get to the Fed because a lot of international central banks have started to weigh in. Is there a risk that the Fed is moving too slowly on this?
I don't think so. I think it's a fair question, and you mentioned both the People's Bank of China and the Swedish Riksbank, which are definitely leaders in this space. Sweden, having a very high-income economy with a very sophisticated both financial system and population, is in a position that it can afford to experiment a bit. But also because the Swedish Riksbank has a lot of credibility and they are able to keep ahead of the private sector. For the U.S., if the U.S. is slower and the Federal Reserve is understandably a bit cautious, I don't think there's any big losses here. This isn't like a private sector race. Whoever gets there first wins.
And you mentioned Kaplan and Brainerd, all of which have come out with comments saying that the Fed is actively looking at issues on digital currencies. And then Governor Brainerd saying that a currency solution is not a solution to a zero lower bound. Walk me through that.
Yeah, that's what I made reference to her remarks, which I, as it happens, agree with. The idea is one argument that a number of theoretically minded economists have made is that if you have a digital currency, then it's easy for the government or the central bank to erode the value of that currency, to basically inflate it away once it's totally under the government's control. And the advantage of doing that is not to rip people off, in theory. It is to allow you to go as negative on interest rates as you need to be without having to go through the banking system, without having other problems. But I think Governor Brainerd makes an argument, and I certainly would make the argument, that it's probably destabilizing to the financial system. It causes people to want to move their money out. It may cause runs on various institutions, if not the currency. And ultimately, there are other ways of achieving your monetary goals than trying to go negative with rates. So that particular piece of the argument, I think, should be killed, and killed soon.
Adam, does the issue of digital currency need to be a central bank issue, a Department of the Treasury issue, or a congressional regulation issue?
That's a really astute question. It's astute for two reasons. First is because it is a public interest to determine what is the value you're trying to serve by putting this in place, and that, frankly, should not be up to the Fed to decide. And second, because right now we don't really have an appropriate regulator or supervisor in the U.S. system. The Fed can regulate interbank payments in a limited way, but there's nobody. In theory, the Financial Stability Oversight Committee could take in if they decided this was systemic. So I think it is not so much a Treasury. I think it is actually a legislative issue. I would like to see Congress talk about and then legislate what goals they think such a digital money should serve for the U.S. public.
Well, Adam, one individual who has an opinion on that is David Marcus, who heads up Facebook's Libra cryptocurrency. We spoke with him yesterday. He did say that government's sort of holding back regulation. Take a listen.
For these types of letters to be circulated for a thing that's an idea, a project, and telling people you should not explore innovation and a project at a time where not only here in this country, but all around the world, the core of our financial system hasn't evolved much in the last 50 years, and consumers all around the world are paying the price for it. I think, we should ask ourselves whether this is the right approach if we want to really lower cost and lower the barriers of access for financial services for all of the people who deserve so much better in the world.
Adam, what do you make of those comments?
Somebody's talking their book. I mean, it's very nice to make appeal to lowering costs and to financial inclusion. Financial inclusion can be much better served by various legal changes to make it so. For example, we have Treasury Direct, we have direct deposit for government payments. We have a number of ways we could restrict check cashing fees and other fees. There are a number of things we can do to do financial inclusion, and that's just in the U.S., let alone around the world. The key thing is to get people to have essentially know your customer IDs. That was the great leap forward in India, and we've also seen stories when that's done badly, people get cut out. This is very serious business, but it has nothing to do with a Libra. It has to do with a public commitment to having IDs for people and giving some value for those IDs and not abusing the information that goes with those IDs. And all of those I would not be willing to trust to some profit-centered, self-oriented, privacy-ignoring company as opposed to a government that is well regulated. Even then, the government would have to be watched. Finally, it's not just about driving down costs. Again, poorer people are exploited in the U.S. because of their lack of access to banking and the payment system. There are ways to fix that. The main reason you want to move to digital currency is to create other efficiencies in the economy and actually, frankly, to prevent people from getting circuited and getting their privacy and finances ripped off.
That was Adam Posen, president of the Peterson Institute for International Economics. Still ahead, European automaker Volvo announces a bold new all-electric vehicle. We get the details from the CEO. This is Bloomberg. The Trump administration has made no secret of its hostility to Chinese tech giant Huawei moving into 5G, placing restrictions both on sale of its equipment into the United States and on sales of components to it by U.S. companies. For the perspective from Huawei's side, Bloomberg's David Weston sat down Thursday with Paul Scanlon, Chief Technology Officer of the Huawei Carrier Business Group.
We work in 172 countries globally. 170 of those administrations we talk to. it would be lovely just to have this type of discussion with the current administration here in the US, to understand the rules. What would you like us to do? To explain our company, to describe how can we do business together? If you set the rules and the standards, we follow the law. This is Huawei Technologies in the US is a legal entity. It will not do anything against the law. Our board has said that, the CEO, the group CEO, and our founder, Mr. Ren Zhengfei, has said that. We comply with the law in every country. There's no way we will comply with a law that says from China what we must do here or another country. That's outside the law. And that's not what Huawei does, and we will never do those things. So first of all, I'd like to encourage, if we could have constructive discussion with the US to explain how we do things, why we do things, how the company is structured. There's nothing secret about Huawei. Mr. Ren is not a secretive person. He travels to almost every country in the world to meet customers, to meet administrations. We don't do anything that's secret or different. What we do differently is we invest heavily in R&D, because we understood 30 years ago, if you don't have your own products, you're just a reseller. Where's your core value? Why we spend so much on R&D? Because we've learnt. Even Mr. Ren's offer of 5G more recently to US companies to say, take a snapshot of our product today and put it into a US company and let the US grow and develop. Great idea. We've done this before, Motorola in 2003. It's not something new or mysterious. It's an honest attempt to say, if you tell us what the rule is, then maybe Huawei can understand how to play the way the US would like.
We were talking with Paul Scanlon. He's the CTO of Huawei Business Carrier Group. So Paul, let me just raise this possibility that the problem that the administration has, or some people otherwise in the United States may have, is not with Huawei. It's not saying that Huawei is a bad company, it does bad things. And it's certainly not with the success of Huawei. If anything, it may be the reverse. The people are concerned you're so successful, you will become more dominant or at least have a larger market share. The concern is with Beijing. And you cannot control what Beijing may do to you or may try to get you to do. And I think that's the concern. Does that make your position somewhat more difficult?
I don't agree. I've been in the company 11 years and I don't agree. Okay, so I won't agree with that position at all. What I'll say is our job, our focus, Mr. Ren, the board, every time I meet any of the board members, every time at our annual conference, half-yearly conferences, Mr. Ren is quite clear. Let's talk about market share and competition. Mr. Ren has stated many times, you cannot have too much market share. If you take too much market share, what will happen to you? There'll be first of all, if there's no competition, especially with Western companies, there's no innovation. The reason this industry is so interesting and exciting, the reason that 5G holds so much promise, is because of the opportunities that it can do, especially to industry. And that's where it can transform things. Could you imagine if everything was connected? All the advances we'd be able to make by pulling data up through the cloud into supercomputers with AI, we would be able to fix things like cancer. We'd be able to fix things like different types of diseases. And they're good things for humanity. So Mr. Ren has always said, you can't take too much market share, number one. Number two, you must provide a healthy ecosystem. Do you know, David, last year we spent more than $11 billion US with American suppliers of components and software and other parts. We would continue to do that if the US would allow us to continue to be part of a global supply chain. So that's what we are.
Paul, well, could I add just one last quick question, which is put it around the other way. To what extent is the United States risking falling behind in 5G? I know not only in China, but you're also selling a lot into India at this point. Is there a competitive danger?
You know what the US could... Look, we already build a lot of 4G networks out in rural US. I think everybody's probably heard about this, and maybe we don't talk about it enough or promote it very much, and I'm not sure why that is. But some of the regions in rural US that I've been to, we can deliver, just using 4G, about 650 megabits per second. We can do that today. We have been doing that. Those sorts of things are available. The US moving down the line of deploying 5G over millimeter wave was necessary because of the constraints they have in this thing called C-band spectrum. But the good thing is companies like AT&T, Verizon and T-Mobile, by trying this 5G technology, even if it's with our competitors, you start to learn about where the business opportunities are. Right. We can see by 2025 somewhere around almost $300 billion in GDP improvement globally. Right. Now, what the US is good at, if it was all connected, what the US is great at is pulling that data up. Look at what Google and Amazon and Microsoft and the others do, and applying leading AI. Why not let Huawei come in here and provide the best technology for connectivity and work together with the Trump administration and improve society?
That was Bloomberg's David Weston with Paul Scanlon, Chief Technology Officer of the Huawei Carrier Business Group. Coming up, Volvo Cars isn't just electrifying its lineup to cut carbon emissions. Now the Swedish automaker says it will pay customers to make sure they plug in. We'll hear from the CEO next. This is Bloomberg. Volvo is entering a new space. The European automaker unveiled plans for its first all-electric vehicle. Its goal is to cut the carbon footprint on each car by 40% by the year 2025. Volvo CEO Håkan Samuelsson spoke with Bloomberg's Sherry Ann and Amanda Lang Wednesday.
From day one it will be profitable, but of course in the very low volumes you have to understand that the cost level will be higher, so it might be a lower profit margin initially, but I think what counts is a bit more mid-term, and then we definitely believe that an EV car will have a higher value for the consumer, and long-term it's absolutely the right thing to do.
So when you talk about the subsidizing the charging costs, just how did you come to that as a decision to help push this car?
It's really not related to the all-electric cars. That is, we will now promote really the sales of the so-called plug-in hybrid, which you could call a part-time electric car. And that's of course very important that you really charge that and not just fill in gas and drive it as a conventional car. So we follow this very closely in our monitoring of the car, and right now it's around 40% of customers buying a plug-in are using it electric 40% of the time, and we want really to incentivize customers to really charge it even more, and that's why we say first year electricity is included in the price of the car when you buy a plug-in hybrid recharge car from Volvo.
So where will these cars be made? Will they be at all affected by tariffs?
They are made really in Charleston. Some models, others are made in Torslanda. So I would say there is no really connection to tariffs. Tariffs is really a problem for us for electric cars, plug-ins or conventional. So I mean, our global production system is based on that some cars we build in one location and trade. High volumes cars we build locally. But I mean, if we would have trade restrictions and we're forced to build all cars locally, it would of course be in the additional cost for our consumers. So we hope that will not be the case looking forward.
So we have seen also the Chinese government now reduce those subsidies for new energy vehicles. Are you at all concerned about EV demand within China?
Yes, I mean the subsidies has gone down, and of course it's always helpful with governmental support introducing a new technology. But on the other hand, we really believe if electric cars are going to fly long term, it has to be sold to customers who are ready to pay for it. It has to be attractive products, competitive on the free market. Otherwise, you just have temporary subsidies. Will not help the climate. That's why we are so sure about that. If we want to participate in a better climate, we need to do it with attractive products sold on the free market.
And to Sherry's point, as you do move beyond those subsidies, you want obviously to get to volume. Is China the market for you? Will there be mass purchases of these kinds of vehicles there?
I think all markets, I mean, here in the west coast of US, for example, it's a very big market for electric cars, but also in Europe there is an appetite for electric cars. I think so far the interest in China has been, to a large degree, been based on incentives. So I think, but also the Chinese market will pick up and see the beauty of an electric car. But it's also based on that you have somewhere to charge the car overnight. It's very difficult if you park the car on a street in a big city. I think those customers will be the last one going electric.
That was Volvo CEO Håkan Samuelsson. And that does it for this edition of Bloomberg Technology. We bring you all the latest in tech throughout the week. Tune in each day at 5 p.m. New York, 2 p.m. in San Francisco. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.